This episode of the Planet MicroCap Podcast is brought to you by Friedman LLP, a top 40 global accounting, tax, and business consulting and advisory firm, providing a full spectrum of services for public and private companies since 1924. Contact Friedman when you will need to raise capital and adhere to U.S. standards. The Friedman partners will work diligently with you to provide the financial assurance, regulatory, and transactional services you need. When the stakes are highest, Friedman makes sure you are well equipped. For more information and to get a Friedman free consultation, please call 856-830-1660 or email Neil Levine at nlevine@friedmanllp.com. Again, for more information and a free consultation, call 856-830-1660 or email Neil Levine at nlevine@friedmanllp.com.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome everybody to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for your support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 169. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@SNN.Network. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. We are now 1 week away from the Planet MicroCap Showcase Virtual on April 20 through 22, 2021. I've started recording some of the keynotes and panels, and you are all in for a massive treat. All our speakers are on top of their game, and you do not want to miss out. Not only that, I know our presenting companies are putting together phenomenal presentations. To participate and find full details on the event, go to www.planetmicrocapshowcase.com. Registration is still open. It will be open throughout the duration of the event, but be sure to do that. Click the register button so that you can listen to every one of the webcasts on the day of its broadcast. So go to www.planetmicrocapshowcase.com and I will see you all there. Now, for this episode of the Planet MicroCap Podcast, I spoke with Julia Carreon. She is a longtime digital executive in financial services who now specializes in Gen Z. I'm a firm believer that as investors, business owners, evaluators of businesses, no question about it, you want to understand your investment's customer base and as business owners, your customer. As part of a generation, millennials, that's been traditionally poo-poo'd by most, I was starting to see the same pattern happening with Gen Z, even falling for some of those easy criticisms myself. However, I wanted to break this thought process and better understand Gen Z as best I can. This conversation started with Caitlin Cook, a Gen Z-er herself, and we're now continuing that conversation with the acclaimed writer, thinker, who has vast experience speaking at conferences, and white paper author, Julia Carreon. We try our best to understand everything we can about Gen Z, but most importantly, in general, why it's important not to overlook what could be the most disruptive generation in human history. I do not say that lightly, but listen in and you will find out why. Thank you again for tuning in to episode 169 of the Planet MicroCap Podcast, and please enjoy my conversation with Julia Carreon. Welcome back, everybody, to the Planet MicroCap Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And I'm really excited about our episodes. I know I say that every time. I'm always excited about every episode, but I actually am very much. I am very excited about every episode, though. I truly am. But I'm very excited about our topic today and what we're talking about. You know, we recently did an episode with Caitlin Cook, kind of speaking anecdotally about the Gen Z investor. You know, I kept jokingly referring to her as our Gen Z correspondent. But here's our other Gen Z correspondent today. That we're really going to dig into some data and really just get a better idea of why this is the next generation could be the ultimate disruptors. So joining me right now to discuss this topic is Julia Carreon. She is a longtime digital executive in financial services who is now specializing in Gen Z. So with that, Julia, thank you for joining me today. How you doing?
Thanks for having me. Happy to be here.
It's great to have you on. Thank you for joining us. And my first question, this is my first question I'm going to be asking everybody is, does the bookshelf look too tilted? Should I don't know what to do. It's an IKEA crap. I'm not sure here. Sorry for anybody who's listening to this, but if you listen to the video, watch the video version. I tried setting up my background and what should I do?
Well, it's not making me dizzy. And I think I mentioned earlier that I tend to have vertigo. And so it's not giving me vertigo. So I would say maybe just add a plant or something, a little small plant.
I should add to it?
Yes. Like maybe move some books away and add a plant is what I would do. But the photographs are lovely.
But the thing is like the books are, I'm not going to look smart without the books there. So you're telling me I got to put a plant instead of the books.
Books are overrated right now. I mean, they're just too contrived. I'm just telling you the truth. You asked me to tell the truth.
This is true. Not only did I ask you to tell the truth, I asked for Gen Z trends. So I'm assuming that's going to be a trend we're going to talk about, that books are over. Should we start there? Are books overrated? Is that
nobody reads?
Nobody reads
really
anymore?
Reads. No.
Oh no, not even on Kindles?
Maybe they do on Kindles, but yeah, nobody really reads.
Oh, geez. All right. Well, before we get into some trends, let's start with your background. How did you arrive to where you're at today, focusing on this potential ultimate disruptor, the Gen Z, this next generation here?
It's such a kind of a serendipitous and funny story. So people think that I am really into Gen Z because I have 3 Gen Z aged kids. And actually, how I got here is the fact that I used to be young at one point. And when I was young, I really had some really cool ideas that I thought people should listen to. And what I found in financial services, especially, is that older generations, people in power, were very dismissive of what younger people in the workforce had to say, didn't listen to it, thought they were the smartest people in the room, and silenced voices, I think, a lot. And now that I'm older and I see how much young people have to offer, I made a decision to be one of those adults that helped empower and enable them to be heard in a way that is relevant, not just to them, but to us as kind of human beings. So it's a funny thing. It's really my own confidence of the fact that I used to know stuff when I was young, right? And a lot of older people don't see it that way.
Interesting. Okay, so your passion for understanding this next generation better was because of your own experience, where you were just like, I have all these ideas for how operationally or just anything can be improved, and it was just ignored. That sucks.
Yeah. So let me give you a very explicit example. 17 years ago, I was calling for omni-channel experiences. I was calling for removing friction from financial services. I was saying, don't chase shiny objects just for the sake of chasing them. Make sure you stay tethered to your core businesses, make them seamless. And I believed financial services would win if we did that. And what ended up happening is not a lot of that. And now, as you see, what happened, I think, with Wall Street bets and other phenomenon in the marketplace, right? FinTech starting to finally take some market share from the big banks. It is because financial services did not innovate in a way to embrace digital like I think they should have. And I think there's a reason for that, and we can talk about that later.
Well, I'd love to hear, like, what should have they done at the time in order to be able to not lose the market share that they've lost?
Right. So I'm going to answer that in kind of a funny way. So silent generation and baby boomers grew up with no touching and feeling and seeing of technology when they were very little. And we know the science is absolutely irrefutable that what we grow up with, like what we touch with our hands and see with our faces and hear with our ears, shapes who we are as human beings. So the silent generation and the baby boomers, for no fault of their own, did not grow up with haptic memories. It's called haptic memory of technology. Gen X did to some extent, and then millennials did. And then right with the laptop, that's the primary haptic memory of a millennial. And then Gen Z has the smartphone. I really believe that Generation Z growing up with the smartphone is an absolute game changer. And what didn't happen with the baby boomers and the silent generation who was in charge for so long, because they had no haptics of technology, they couldn't relate to it, right? So they couldn't see or believe that technology would be as important as it was or would be 20 years ago. And so you had younger generations trying to convince them that it was going to matter, and they let their own experiences overtake everything, right? What I see and feel and hear in front of me right now is what I believe the future will be. And a great example of that is the CEO of Blockbuster, right? Who refused to buy Netflix for $50 million because he couldn't relate, right?
Great documentary. I highly recommend everybody watch The Last Blockbuster on, I think it's called The Last Blockbuster on Netflix.
So good.
So good. Sorry, I interrupted you. Continue.
No, you're done. I want to talk about that. So, that to me was a great example of someone, right? The person in charge and the board could only see what they believed their experiences to be, and they were not embracing the next generation of preferences. And so that is, I've seen it in my lifetime. And because I was frustrated by the lack of innovation in financial services, kind of by the incumbents, not by fintech, but by the incumbents, I started blogging about Gen Z as a disruptor out of total frustration for the fact that we weren't listening to the fact that we are going to be irrelevant if we didn't engage in what future people wanted to do, in terms of doing business with us.
Absolutely. I mean, it's funny you mentioned that, because I talk about this a lot with a few other guests that I've had on, just especially when you think about microcap and like the frustrations that investors have had just being able to buy whatever they want, buyer beware. You should have it's especially when you think about in the last couple of years here with quote unquote shit coins or altcoins that are just for shit companies, and it was so easy to figure that out, to go in and buy some of this meaningless crap. And yet, it was an absolute nightmare to buy a pink sheet stock that actually might, be generating revenues and be a good company. They just happen to not be fully reporting, and it's so difficult to go and buy that, so it's a conversation that I is just had ad nauseum in our microcap land. That's for sure.
Well, yeah. And think about it. There's friction everywhere in the ecosystems that surround all of this, right? There's friction in the oil and gas business, the legacy oil and gas, in asset management. And by friction, I mean, it's just not easy to get something done, right? And so what I started thinking about is, my God, I see our kids who are completely immersed. And I use, as you know, Angry Birds as my example, being 3 years old in 2010, playing Angry Birds when they stole their mom's smartphone out of their purse. Like, everything about that experience is visually appealing, appeals to their ears, and it's easy. So think about that kid growing up and having to do business with a, large financial services institution who wants them to fax 66 pages of documents to get a brokerage account open. And that still happens.
Oh, and it's, I mean, look, it's getting even younger. I think about my daughter. She's what, 15 months already? And she just spent the last year of her life in COVID pandemic, barely able to see her grandparents on both sides. And, you know, she understands how to, like, she could open the phone if she only had the facial recognition. She understands that you have to do the touch screen now. You know, that's how you get access to this thing that mommy and daddy keep playing with.
Exactly. And by the way, so your daughter is Gen Alpha. And
okay, that's interesting. That was going to be one of my questions for that.
Oh, it was. Oh, well, we'll save it. But I just look at, I think Gen Alpha is going to be even better disruptors and rule breakers by the time they grow up.
Oh, for sure. So I think we're still in that setting the stage era or part of our interview where, you know, I want to understand better of like how we got to what the Gen Z, what makes up a Gen Z person nowadays and what's important to them as an investor, as a consumer, all that stuff. But getting there, you mentioned how these old industries where there is need for disruption and how they're just not listening to it. You have to admit, part of it is that haptic response is just because they didn't grow up with that experience of this new tech or even experiencing new tech, to being open to new tech, that they're stuck in their way. But I mean, there also has to be some, I'm sure you thought about this, that there's some financial constraint, right? That's keeping them in their old ways. There's a lot of money in hand, you know, and the risk part of it too, of like, okay, well, I'm going to take a risk on this. I'm not totally sure if this new thing will end up working out. You know, what are your thoughts on that in painting this picture?
Right. And I appreciate the question. And I am not on that, you know, I don't really have never played kind of in the financial part, like the compensation part of the business and heavy finance and heavy quant, but it's clear that compensation models need to change, right? So the C-suite is usually invested in certain number of months of return, right? Where they have to make sure that they're giving shareholders good value, and they can't be wasting capital on projects, right, that fail. And I do think that the compensation models do not lend itself to long-term investments. And then, you know, I think, you know, I spent my career at an incumbent, and I could write a book about why technology projects fail in large companies. And it is not, it is no joke, right, that 80% of IT projects at any firm, healthcare, financial services, across all sectors fail. And the reason that they fail is complex, but it's often, you know, culture. You've got, you know, bureaucrats and politics and everybody trying to play in their own sandbox, competing against really viscous IT stacks that have grown up over decades with mergers and acquisitions where you didn't have the right people in place that were able to make decisions about what tech to keep and what tech to retire. And then the last thing I'll say about it, because I really could write a book on this, and I think I've said it in another podcast, a lot of the large firms try to eat their elephants whole instead of in one bite at a time, where they're trying to re-platform mainframes instead of fix problems around the mainframe that delight clients in the meantime, right? They try to go behind a curtain and do some, billion-dollar project, and that's how much they often cost, and they fail. So I think it's just a lot of old world thinking combined with the finances and the compensation. And what I've said is you've got another generation of people that are coming up behind you that are not going to have the patience that Gen X and millennials did with all of this.
Right. You know, because I also think about like the Blockbuster example that we were chatting about, you know, where for those who didn't see the documentary, they interviewed one, I think it was the CEO who was there in the room and just basically said no to buying Netflix back. I think it was in 99, right? It was 99
I think so.
2000. And the thing that I kept thinking to myself was, because this happens all the time with management and looking at new technology or considering an investment or an acquisition or, just building something up in-house to make things more efficient. It's doing that. I don't know, maybe it's a cost analysis or not, but doing that just general analysis of like, is it too soon for us to be thinking of that? I have an awareness of it. And maybe at some point I want to do something, new in technology that meets this potential new demand from this new consumer, but when is it too soon? Is it ever too soon to think about some of these things?
Oh, such a good question. I love that. It can be too soon. And the example that I like to give is that in the mid 90s, I was at Stanford in a conference at Stanford, and a futurist came and spoke to us and told us that the physical newspaper would be retired in the next 10 years because of technology. And he is not wrong that the physical newspaper will go away someday, and that we all know that readership of actual papers has been on steep declines for a long time. He was wrong, though, about the timing, right? Because remember, I think it goes back to, again, haptics. Silent generation and baby boomers were raised touching paper. So paper will not go away until those generations, in many ways, and it sounds awful, literally physically die. So, and then Gen X has some relationships with paper. So yes, it can be too soon. But I wanna answer the question about how do you know the difference? And maybe this goes again back to compensation, that I don't understand that part of the business enough. But 10 years ago, I wrote a strategic plan and a white paper called The Future of Advice. And I basically said, advisors and clients will expect 100% frictionless exchanges across every channel, irrespective of the type of transaction. At that time, if you remember, a lot of executives were chasing robo as their shiny object. So they created a new business model without fixing their existing one. And as we know, right, I ended up being right about where we landed. Do you want to know why I was right? Not because I'm so smart, okay? It's because I spent hours and hours and hours in rooms with clients. And because I was in the very high net worth and upper high net worth segment of the market, I was spending time in the room with their heirs. And their heirs were Gen X. And I was listening to what they wanted, and what they wanted was frictionless exchanges. So I guess what I would say if I was a CEO is, you've got to be in a room listening to your clients. And instead, most C-suites are talking to each other, meaning everybody else in the C-suite that's doing an echo chamber about what they think their clients want because they think they're the smartest people in the room. You have to be spending time with your clients and your clients' next generation, whatever that is. And if Blockbuster had been doing that, Bob, they would be able to know that this was inevitable, streaming.
Right. Yeah. I mean, and the funny thing is that it wasn't even like they were right. I mean, we keep talking about the doc. We're using that as our main example here, but they were right there. It was just a matter of, part of it was also they just had a terrible balance sheet, and the company was going to go under no matter what.
Right.
But, and also, but I would even argue Netflix at that time, it wasn't a streaming play, right? It was I used to use it.
It was your mail service. You're right.
Yeah,
you're right.
It was the mail service. So, I mean, yeah, they missed the boat in that they could have just been doing that sooner. And who knows, if they'd made the acquisition, they would have had the talent in-house to then think, all right, well, there's people in here now are pushing the idea of streaming, and we should just do that now versus, not buying Netflix and then, then becoming the behemoth that they are. By the way, I'm not a shareholder in Netflix, but
neither am I.
But all right, I think we'll come back to that as an example. But okay. Yeah, your thoughts are?
Well, I was just going to say that the other question I think you're raising, which is a good one, is would the DNA of innovation still have been part of Netflix if they had been bought by Blockbuster? I think that's another great topic.
You said that way more eloquently than I ever could have probably dreamed of. So yes, that was exactly what I was trying to say.
So
yes,
good.
please. Yes. Okay. So your thoughts on that? I mean, can that DNA transfer over?
Well, so then again, I have to go back to my soapbox, which I'm so sorry if people are tired about it, but
stay on the soapbox. We're cool with that. No problem.
My soapbox is, don't just get out of your echo chamber. Have if you're an incumbent, right, not just a startup, because you know as well as anyone that startups have their own challenges, right? So that's not my level of expertise, but for incumbents, have young people engaged in the conversation about relevance for your firm, and have a culture of innovation, and make sure that your chief digital officer is not the only person responsible for innovation. Everybody has to be bought in to the idea that nothing that we're doing today is going to stay the same. And if you believe that, you're a dinosaur at hello. I mean, I'm sorry, you're just done for.
I couldn't agree with that more. Could not agree with that more. So now to our main topic today, talking about Gen Z, let's start off with our overarching question here. Why is the Gen Z generation the ultimate disruptor versus other generations?
So it absolutely, in my humble opinion, has to do with the fact that they are the first generation of human beings that have been born with a smartphone. And a lot of times on Twitter, people love to argue with me about when I say that, because they think what I mean is that Generation Z only wants to use a smartphone. I'm not saying that at all, right? We know Generation Z and all generations are using digital platforms in all forms, and they will continue to evolve, as you and I both know. But that idea of your daughter being able to get so much richness, and whether it's good or bad, and you want to debate this, and a lot of people with that movie about the social network one, I can't remember.
The Social Dilemma. I haven't watched it yet.
Social Dilemma.
But I know what you're saying. And to be fair, like, it's not, the only time we give her screen time is when she's doing FaceTime. But during that experience, you
can see it. Yeah.
You can just see that. Yeah.
And look, I do a lot of keynotes, and people always want to debate me about the science of screen time. We very severely monitored our kids' screen time when they were very little. So that isn't what I'm here to talk about. What I'm saying is that experience is so intuitive. That's really, at the bottom line, it's very intuitive. So I have become convinced that experience, right, the significant haptic experience that is shaped right around the age of 3 will cause Generation Z to not tolerate bad experiences, whether they're online or offline, because their experience has been set by the phone. And that's in 2 seconds or less, 2 minutes or less. That's exactly why I think Generation Z is a force to be reckoned with.
So how does this have effects across multiple industries? Just that thesis right there. Let's write the white paper now. How that affects disruption across so many industries that we're seeing disruption in right now.
Right.
And new stuff popping up.
Well, and so I have tweeted a lot about kind of the degree to which I have been was really made fun of at work over my Gen Z pastimes. And I'm going to tell you that what happened with the Wall Street bet situation was very vindicating, not because I predicted anything about that scenario specifically, right? But what I have been saying is that Generation Z, because of their native tendencies for social media, I mean, look at Caitlin. Look at how good she is at social media. I'm serious. Like,
100% agree. You will not. Yeah.
Right.
She's incredible. Oh yeah. No doubt.
And and most of it, I don't know if she would I mean, I think she would say it's innate, right? So go on.
No, sorry. No, I mean, well, my only comment was, it's a combination of not just being a genuinely, she's just a genuine, awesome person, but also just in general, being a genuine human being and be able to translate that on social media. Like that's fascinating to me. Something I think about all the time.
Well, and so when I started writing about this 5 years ago, that what I said is that native social media tendencies and innate feelings to like innate ways that they're using technology will cause disruption in ways that are unpredictable. So the whole thing that happened with Reddit, right, was unpredictable, but in a way it was predictable insofar as you should expect that kind of unpredictability is kind of what I'm saying, right? And so they started using Robinhood because Robinhood was accessible. They were gamifying things, right? And I am not a shareholder in Robinhood, so let's be clear. But what they were doing is appealing to that audience and demographic in a way that was not patronizing, right? Which a lot of the older incumbent firms do to younger generations, and they forced a disruption. So I think that where the next big puck, right, is going in terms of completely underestimating what is happening, I think, and you know this, is in esports. And I will die on that hill that what is happening there is changing people's expectation of engagement, and it will not stop at just one sector.
Oh, I could not agree more. And to be fair, it's still something that I'm having such a difficult time understanding, because I was one of those kids where, I was always outside playing sports, and I had a couple best friends growing up that they would say, "Hey, come to the Counter-Strike bar and let's play Counter-Strike." And I sat there for 5 minutes. I said, "Get me the hell out of here," because I just don't get it. I don't understand. I'm not a gamer in that sense. Like, I grew up with video games, but I just couldn't do that. So to have that experience, and then now seeing that there's Counter-Strike tournaments and this, like, it's just absolutely incredible, beyond anything that I could truly, really comprehend.
Right. And I think that's why it's so difficult, right? I don't game at all, but just because I don't, what happens is a lot of people that have purchasing decision power in these big firms are so dismissive of it. Like, video games are stupid, esports is stupid, but look at what happened with video games. So let's look at the evolution of social media. Okay. When millennials,
we're going to talk for hours. This is great. This is so good. Sorry. Go. Sorry.
So you think about what happened with social media and millennials, right? Millennials, they, were one-on-one with their phone in a lot of ways, or doing one-to-one maybe with some other person on their phone. By the time Gen Z was really in their formative years, they were going, they're on Twitch, talking to their friends, meeting up people on Discord. Generation Z has really been the reason that social media has become so social, right? Not just one-dimensional. And that, I think, is shaping, new business models coming out of Discord and new business opportunities that most people like me could not have really predicted. But you could predict it better if you were at least paying attention to what in the heck is going on over there. So the whole thing about people's brains are being shaped by what is happening on these channels and in esports and in video games. And if you're not paying attention to that, I just think you are really potentially missing the boat. So if you're preparing to retire, I think it doesn't matter. But if you're still trying to be relevant, you should be paying attention.
Absolutely. All right. So I want to learn more about the consumer preferences. You mentioned earlier that the Gen Z investor in general just does, because they grew up with the phone in their hand, tablet, just screen time. And again, this isn't a parenting podcast. Right. Okay. You know, at the end of the day, I'm pretty sure my child is going to have a screen in front of her. And you know what? I'm going to 1 or 2 because I know that's the way in which she's probably going to be able to have a career in every field.
Yep.
So I'm going to stop there on the parenting front. But, you know, but in terms of not wanting to have a bad experience, you know, I want to understand this better. Like, what does that mean? And how does this shape the consumer preferences of this generation?
Well, so I think it's all about ease of doing business and convenience, and not just thinking, because a lot of people get hung up on this. I am not sitting here telling you that Generation Z or Gen Alpha only wants to do things online. They actually don't. They are being raised by Gen X in, as most of the demographic of their parents. And what you're finding is that they have hybrid tendencies where they like to research online and then go into the mall to physically touch things and then go back home and buy it online. So you're seeing kind of similar patterns across generations, but they're approaching it differently, right? And that speaks to, for as much as things change, they often always stay the same too, right? So where I think consumer preferences are changing is in how they want transactions done, because they don't want it to be difficult. Like, I am getting to the point where I do not like to do business with somebody that doesn't let me make an appointment online or text somebody like, are you on your way here? I don't want to have to talk on the phone. So it's those, I just think it's absolute ease of doing business. And then eventually for, things I don't really understand, I do think you'll see like heavy AR, VR, alternate reality stuff, kind of the stuff that Elon Musk probably should be on here talking about, that will eventually, Neuralink stuff that I don't understand. But I do think that is the future, because younger generations are so immersed in technology.
Got it. I mean, is it coming from a place, this is going to sound, I mean, I'm a millennial, but this is still going to sound like old man Bob question probably. But like, I mean, is it coming from a place that, at least from what you're seeing with Gen Z, is it coming from a place of wanting to do things more efficiently, or just they want to have technology as part of every aspect of their human experience, so that if it's not part of it, it's somewhat weird, So
I think the answer is both. Okay. Right. And so I'll tell you, I gave a keynote at Brandeis University about Generation Z and how technology, right, was a huge motivator for them. I had the chance to sit in on the session with the students afterwards. Okay, this was several years ago. And I was taking notes. There was a physical therapist, a law student, a medical student, and somebody who was doing art, and somebody else who wanted to do nonprofits. Okay. Sitting there, this is in 2017 or 18. Okay. Every single student for every single field, without being, whatever, coached, picked up their phone at one point in their conversation to talk about how whatever they were building had something to do with their phone. I was like, oh my God, I'm so onto something here, right? Because my point, Bob, is that they don't even know they're doing it. So when you ask what came first, the chicken or the egg, I think it's both, right? And that's where I think people that are older and not paying attention are not understanding that it is part of who they are, right? The law student had a use case. The nonprofit person had a business that she wanted to build. And all of it revolved around technology, all of it, because it's who they are.
It's just, I love how you distilled that question, because it really was, it's the chicken or the egg question, right? Like, it's really, that's what it comes down to. So, I mean, this is going to be like my social clip question. I have to ask, I mean, and I already assume the answer is probably going to be esports and gaming, but what areas are you seeing the most disruption already, as a result of the Gen Z consumer and the Gen Z experience?
Well, so that one is pretty easy. I do want to talk about what I think people should be paying attention to, is for sure entertainment, right? I mean, that is a super easy one that I think is really relevant. What's happening with Netflix and, the way they have been able to disrupt. A lot of people I don't know that a couple of years ago, they hired the CFO from Activision or EA. I can't remember, right? Because what are they doing? I believe that they're figuring out how to do video games type of stuff, predict the endings of interactive movies, predict the ending, change the ending, based on some kind of interactivity. So Netflix and entertainment and esports, I think that whole stew, has been the most obvious thing for disruption. But what I think is people should be paying attention to is how that bleeds into real life situations. So a company in Austin that I'm not associated with, I don't know anyone there, called Interplay Learning, right, is just got an infusion of money. They are teaching skilled workers how to do their job using interactive AR, VR technology, gameplay kind of methods. And I think where people should be paying attention is ed tech, but not ed tech in the I want to do something about traditional learning structures, meaning I want to do something about the future of college. That's not what I'm talking about. I'm talking about how are you teaching people using gamified technology in whatever sector you're in, and how are you using that to inspire innovation and keep yourself relevant as a sector. I think is a super completely underestimated play for anyone.
So what's failed so far? Where have there been companies or technology out there that are trying to build? I mean, I guess, all right, I already thought of one.
But tell me.
And I would say, what was it called? Quibi, the 5-minute, the platform that had only content that was like 10 minutes long or something.
Oh, I don't even remember.
Yeah, I mean, I think it was only launched for like a few months and it was already gone. And they had amazing talent and everything around it, creating content for it. But the bet being is that people use their phones all the time, and secondly, that they want to consume short content. A lot of short content because of how much we use YouTube.
Oh,
right?
got it.
So it's creating higher quality, short form content, and that this is the only platform where you only get that, and you pay a monthly fee to get access.
Okay, so here's what I'm going to tell you is wrong with that, and I don't even remember them, but I'm going to tell you, and I'm not even going to apologize for telling you what was wrong with that. That was a business in search of a problem. The solution already existed. It's called YouTube, and people already go on YouTube to figure out, how to fix their sink. So that is where I think we see technology startups failing. I had lunch with a really good friend of mine today who works at SVB at Silicon Valley Bank, and we were talking about there are so many startups that are searching for a problem, and it's like, my God, there are so many existing problems out there that need to be solved. I would really think you need to fix problems that do exist. I mean, let's talk about Interplay. And again, I have nothing to do with them. I just find it fascinating, right? What you've seen is you've got a huge dearth of skilled workers out there in the world, right? People that don't want to be plumbers and mechanics, but we need those people, at least right now, to exist. And Gen Z and millennials are not interested in those types of jobs because I think there's not a technology component. Think about the fact that what a company like Interplay, and I think we'll see others like them, are solving is training those kids to be plumbers and mechanics using technology, right? Meeting them where they are and then setting them off in the world to go get a real job. I mean, I live in Austin. It's April. We have not been able to get anybody to our house to fix stuff from that huge ice storm because there's nobody to fix. They're all booked. Plumbers and sprinkler people and electricians. So think interplay is using technology to solve a real world problem. And they're taking all of the components of school tuition is getting more expensive. Gen Z doesn't believe in traditional college, trajectories like when I was growing up. They're taking all of that and reimagining what that might be. And those, I think, are the startups that are super interesting. They're solving real world problems with technology that's very bleeding edge.
Thank you for that. By the way,
I
hope everything absolutely. By the way, I hope everything gets solved quickly. I actually, believe it or not, my wife and I were in Austin during that storm. We got caught there for that week. It was crazy.
You told me not to swear, but can I say that it was a total shit show? Can I
it was a total shit show. No, it was an absolute shit show. I mean, did you lose everything? All the electricity, all that, everything?
We didn't lose any of that because we're right by a fire station. So we were considered something, but I'm going to tell you the damage to our house was significant and we still haven't had it all fixed because there's no skilled labor. So, there is like looking at holistically the problem and making sure that nobody is out there solving that problem is super, super interesting. And look, I want to say this about Robinhood. I think that Robinhood should have gamified investment acumen and financial acumen with the same vigor with which they gamified investing, and they should have done the acumen part first. So that, I think there's a huge need for interactive learning in the context of its experience, not like the place we just talked about, which was just doing learning outside of any context. I think the world is saved by good context, and that's critical.
Agreed, 100%. I mean, if there's one thing that I think about probably the most, and I don't just think about this because, I'm in microcap investing and whatnot, but it's the ed tech side of things, especially the financial education technology, is trying to create I don't even know what it is to create. Is it courses? Is it tech? What is it that you can create that can help the next generation of investors? I mean, we try on just the content creation side and, reaching this generation with podcasts and content, posting on YouTube and whatnot, but it's that K through 12 of what is it that can help them learn or that we can actually say, hey, go and watch this or go and take this course, go and do this so that you can feel fully prepared to go in and invest or do anything having to do with finance. That's something that I think about on a daily basis.
Well, and I think that was another huge missed opportunity by the incumbents after the financial crisis. I think that they should have all gotten together, all the major CEOs, and created an investment acumen program that they all invested in that looked and walked and talked the same from a branding perspective, where they stopped competing with each other and lifted investment acumen and financial acumen to a level that was for the good of humanity, right? And stopped just competing with each other on this certain level playing field. If they had done that, I don't think that you would see the disenfranchisement that we've seen and people running away to alternate channels like fintech, where, it's not as regulated. There's still kind of the Wild West. None of that has really necessarily been good for consumers, but what's happening is consumers weren't getting what they needed. So,
and I'd argue that opportunity is gone. It's gone.
I totally agree with you. Yep.
Yeah, because you think these generations trust these institutions?
Care. Nope.
They do not give a shit anymore. Mm-mm. It's gone.
It's gone.
I mean, it's fascinating that that would have been during the financial crisis or just after would have been the perfect time to say, you know what, enough of this. Not only do we need to create something for ourselves because we're doing highly risky crap stuff, but just for that next generation, because their trust, that's why there was Occupy Wall Street. That was why Wall Street Bets happened. That's why a lot of these events just happened as a result of just rebelling.
That's right.
Screw you guys.
That's
we don't
right.
need you.
Well, and look at, I have been in rooms with very senior executives who have told me, I don't care about millennials or Gen Z because they don't have any money. And I would argue that that is exactly what is wrong with the industry. And so is it any wonder that the Wall Street Bets folks were all running to Robinhood to place their trades? And so it's that, again, though, goes back to why I care about Gen Z so much, is because that kind of deep cynicism, I don't think is good for humanity, I guess.
No. Yeah, no, definitely not. Definitely not. 100%. What I mean, you clearly have thought about this a lot too. I mean, what do you think right now can be done to, I mean, I don't want to give any startup ideas that you might have, to solve this potential problem. But I mean, what are some of what's been some of let's if we had a brain trust, this is the Julia Bobby brain trust right now. What are some of the things that you've thought about that, you think could work, or, I don't know. What do you think?
Well, so I'm going to be honest with you. This is the $1 million question. So I am not an entrepreneur. I wish I was. And I have spent many sleepless nights trying to figure out what's missing, right? Where are there gaps and how do you fill the gaps? And I haven't come up with any kind of $1 billion idea yet. Although I think what happened is I had some good ideas and didn't do anything about them. And now I'm like, that was a good idea 10 years ago. Why didn't I do something about it? But where my brain is right now is up on how are you going to leverage what is happening with these people's brains around games and how they learn, and then how do you make that relevant for sectors that they need in order to run their lives, right? Because that's not going away. And I went into my youngest son named Josh, who's got quite the personality on Twitter, because he's so he's not on Twitter, but he has a personality through me on Twitter. Everybody loves Josh. But I went in to go watch him on Minecraft yesterday. It is unbelievable what they're doing, right? And so though Josh is going to need to grow up and have a job someday. Come on, Bob, let's do a company that's solving a problem for them, because they are they're going to want to be engaging differently. And I don't know that I think a lot of companies are going to be relevant to them. And I always say that relevance is a choice. That's my favorite hashtag. My other favorite one is evolve or die. These are Julia's hashtags, besides Gen Z disruption. And it's a great question about what do you need to build in order to be where they are, because they have a ton of money and they're going to inherit a ton of money. And there is a lot of friction out there that needs to be solved.
So how can the gamification of investing succeed? How can we turn what is clearly, all the tools are out there now to gamify investing. And, I remember the fantasy stock portfolios that we used to do, and you try and win that after, you put a couple stocks in for the quarter or whatever, but I think that that's now old world. I don't know if that would really work anymore, but how can you gamify investing to the point that it becomes an educational experience?
Well, and so I think you need to be gamifying the acumen and education and awareness around it in a way that is compelling. I do think that there is something there. And I don't have it at the tip of my fingers. There was just a thing that was published about how little this generation even understands finance, and yet they're still investing. And then you've got the emergence of DeFi and Bitcoin and all of that stuff, crypto, all that on the blockchain network, and you go, oh my God, it's scary that they know so little. And so I do think it goes back to how are you teaching them the context in a way that is powerful and reaches the deep gray matter in their brain, so that when they're doing that transaction, they understand what they're doing. And that's where I keep going. There's a huge gap. And when I see the some of the firms that are out there that are trying to do investment acumen, I'm going to be honest, they seem very patronizing and like they're really playing to really baby kids. And I just don't think you reach a 15-year-old with that. So
no way at all. No,
right. You've got a kid who's growing up playing Mortal Kombat and Call of Duty, and then you want to give him a baby app for how to learn investing. It's insulting.
Right. Yeah. It's like, and it's difficult to try and think about, all right, well, what's the balance between like, stuff for kids, right? Like, maybe incorporating animals or something versus like, going full, cracks them all up like a Wolf of Wall Street type thing, which is horrible practices. And yet, that was a huge movie and it got a lot of press and everything. As a microcap guy, pardon my French, I friggin' hated it, but at the end of the day, like that's something that, it's captured pop culture, right? You see those memes, Leo DiCaprio memes as Jordan Belfort nonstop, shooting the moon, all that kind of stuff, right? So it's finding that happy medium that reaches them in a healthy way that also isn't like, it's not patronizing, but I don't know. Sometimes I think that it's somehow bringing together an influencer network and aggregating some content around that and pushing that out, but you also don't want to come off as like you're pushing this stuff on them,
Right. And that goes back again to the context. It's super hard, but I do think that there's something about kind of, there's large Discord influencers that are doing some cool stuff to try to help educate. But again, a lot of that is they're pushing their own agenda and their own point of view, which may or may not be objective, right? Which again goes back to how do you teach them and start teaching them when they're very little about budgets, starting when they're in third grade, right? And then increasing it over time. It's a major problem that I think requires parents, firms, and the education system. So
yeah, no, I agree with you, and I'd argue that you're 100% right. I honestly, like that. I don't even know why I said there's even more to add, but it's about making sure that it's more about inventing the tools so that the people who have influence over millennials, sorry, not millennials, but like Gen Z, Gen Alpha, it's creating tools for them to communicate some of these educational messages. Because at the end of the day, I think that it comes down to the personalities and the people that are then communicating to those generations versus just saying, okay, we're going to create the platform and here's all the stuff and you're going to take a test and a course and you're going to pass it.
It doesn't work.
Gold star, good for you. You know how to finance. Go on your merry way. Like that's not going to work.
No.
No, it's just, but yeah. But sorry, you're going to add.
No, I'm good. I think you're absolutely right. And, I go back to if you were going to invent a company, would you invent it like a Robinhood with the financial, really heavy gamified acumen? And because they had credibility, they understood their audience. And instead of rewarding good behavior, they kind of rewarded bad behavior. And so anyway, I don't mean to dunk on them because I think they did a lot of really cool stuff. And I think that was a huge missed opportunity. That's it right there. It's like, sorry. The whole point of this is that eventually we're going to go into business together. We're going to figure out this solution, right? I'm in.
So, but I mean, you're basically right. It's being able to create a Robinhood that has all the tools and everything with adding in that heavy gamified teaching acumen component, I mean, look, creating the Robinhood part, and I think that goodwill, that it's not easy to do, but it's much more attainable than this part. Like, because as you can tell, that just hasn't been done. And you know what? If Robinhood would have done it, they would have.
Right. Well, and so I don't know how much time. I don't think they had the will, but that's a whole nother story. So let's just say, if I don't know how much time we have, but I want to say something. We're good. Okay. I want to say something about this, right? So when I get a stock grant through my corporation, where if I'm working at one of the big incumbent, or like any major corporation in the United States, right, it gets processed through, and it gets processed through a company. I don't want to dunk on them. Okay. So I'm not going to say who it is. Right now, for me to finish the transaction, I have to get a piece of paper in the mail to finish getting even a login. Then I have to often mail in something, paper mail to Minneapolis. And then I have to go onto a different website. Every year, I want to take my laptop and hurl it out the window. And every year I write the CEO, because I'm crazy that way, to say, how on earth is it that I cannot execute these shares without this horrendous process? Like, what's happening there with getting, shares granted to me or to you or whatever? That process exists. It is a real company. And there are so many businesses that we could be like impacting with different seamless processes that also have education built into it. They are everywhere and so far behind. There's got to be a business that we're going to do together. Bob, come on, let's do it.
I know. Listen, I don't know if I have enough caffeine yet. I mean, we're stuck, but I think we're on to something. It's not just trying, it's really that acumen part of things, it's trying to create these, whatever that is,
that
like
magic.
Like that magic. I don't know if it's a personality that is the guiding force behind that, or if it's just the actual content itself, or making it more animated or whatever, I mean, that's the part that I think about quite a bit, especially with what we're doing, what I'm just doing on a daily basis with,
right.
Sharing stories of companies and doing interviews like this, it's just, it's something that, one day, maybe it'll be us, maybe it won't be. I hope whoever it is, I wish them nothing but success, to be quite frank.
Same.
So we are, look, we could go on for another hour or two just talking on this topic, but, I have to ask, what would you say, and you kind of alluded to this already, but what would you say is an experience that impacted you the most, that put you on this road today? You've kind of mentioned one already, but I don't know, I'm sure there's multiple that got you here.
Yeah, there are multiple. The one that really got me going on haptic memory and the importance of haptics. And I've told this story before, and I apologize to people that are listening that have heard it before, but I was presenting at a major fintech conference talking about the urgent need to innovate and skate where the puck is headed, not where it is today. And a pretty well-known executive in the industry stopped me from the audience. I was on a panel, and he told me that there had been no disruption heretofore, and that fintechs were not eating market share, and that I was basically being naive. And I got super frustrated debating this with him in front of an audience, and finally just said, whatever, my kids aren't going to do business with you, and you might be dead by then, and you won't care. But it's super frustrating that, right? And then I just ended it. So after, a gentleman walked up to me, he introduced himself. He said his name was Derek. He said he was a PhD in social psychology from Harvard. And he asked me if I knew why I said my kids would not do business with this firm in New York. And I said, I just know because they're playing video games, and I know what the processes behind this person who's talking look like. And he said, well, okay, that's fine. But here's why you said it. You said it because of haptics. And people do not understand how powerful haptic memory is in terms of driving consumer behavior. And he said, if you started blogging about that because you're a good storyteller, you don't have to be an expert in haptics. You start telling stories about why that matters, and you will win in terms of how you're right. Not today, not tomorrow, but the next day. And that's what I went home and started researching it, and I got goosebumps, and I was reminded of that social psychologist, innovator, whatever at Stanford, who was completely wrong about the timing, but right about the sentiment. So what people don't understand is that haptics takes a long time because it sits literally in our fingertips with the generation. So it could be 3 to 5 generations before something really happens, but you and I get to be alive while the first generation of humans born with the smartphone is around. And that is very, very cool. And that's where I started like, wow, this is so amazing.
I'm pretty sure that I looked away because I was writing that down as a potential title for this interview. Why the power of haptic memory and tech disruption.
Love it.
It goes hand in hand. Hey, look, you got me convinced. I'm gullible though, so I'm an easy convince.
Seriously though, think about that.
But in all seriousness,
he was like, nobody is talking about the haptics of this generation. The other thing is that everybody loves to talk about millennials being hyper technology savvy. I'm just going to tell you, they got nothing on Gen Z, because they were not born with a smartphone. And that is the difference.
Oh, I'm exhibit A of that. Okay. That is like a no doubt about it. And you saying that, I was like, yes, 100% true. I'm still an idiot when it comes to Instagram. So, okay. All right. Well, to close out our interview today, my final question for you is, let's say there's some CEOs and investors listening to this right now. What advice would you have for them when they should think about not just investing in companies maybe that are targeted toward Gen Z, but also companies that may want to start thinking ahead to make sure they have Gen Z in mind when they're building out their businesses?
So the best advice that I have is, and I don't see a lot of people, I don't think, paying attention to it, is, do they have a DNA and a thirst for innovation? I mean, I know there's a lot of dunking on Jeff Bezos today on Twitter. I don't really know what's going on over there today about what's trending, but you read his annual letter and he has DNA. They have DNA of innovation, right? They are not sitting still. I think Apple, especially under Steve Jobs, had that same perspective. Netflix has it. So are you investing in companies that have it in their DNA, that everyone is responsible for innovation, that they are not just okay with the status quo? And I would be very wary of any firm that you get a hint of, you know what, that's not our client. The minute somebody tells you that the younger generation is not their client, you know that they are only thinking about returns for right now. And good innovation takes years to do well. And that's why you needed to be thinking about it, at least in my space in wealth management. You needed to be thinking about it 15 years ago, not today. Because if you're thinking about it today, you're already irrelevant, right?
That's such a... It's just so beautifully said. I love what you just said. That was just brilliant. All right. Well, with that, Julia, where can my audience go and find more information about you and follow all your insights and thoughts and all everything?
So I'm still working on what am I doing since I left my job in October. I should have had my act together sooner. So I am on Twitter. I actually just had a really funny post that kind of went crazy yesterday. You'll have to check it out. But find me on Twitter. My DMs are open. And I just want to say it was delightful to get to chat with you. These are my favorite moments of the day, talking about the future. And it's been really great to meet you.
Absolutely, Julia. The pleasure's all mine. I had so much fun. I learned just so much today. I hope everybody listening found value in what we talked about today. We went esoteric on things. We talked about the future. It's just, this is the kind of stuff that if you're really trying to think ahead in your investing strategy, and companies are trying to think ahead in what they should do, these are the types of interviews that you need and people that you need to be listening to. So Julia, I heard nothing but great things about you, and you lived far beyond the bill. So I'm so thankful that you joined me today, and I look forward to our next chat.
Have a great night.
Thank you. You too. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.
This episode of the Planet MicroCap Podcast is brought to you by Friedman LLP, a top 40 global accounting, tax, and business consulting and advisory firm, providing a full spectrum of services for public and private companies since 1924. Contact Friedman when you will need to raise capital and adhere to U.S. standards. The Friedman partners will work diligently with you to provide the financial assurance, regulatory, and transactional services you need. When the stakes are highest, Friedman makes sure you are well equipped. For more information and to get a Friedman free consultation, please call 856-830-1660 or email Neil Levine at nlevine@friedmanllp.com. Again, for more information and a free consultation, call 856-830-1660 or email Neil Levine at nlevine@friedmanllp.com.